I think we're already live. Oh, we are live. Hello, everybody. We have a super Bitcoin chill dog today. He's a little camera shy for the first time. I'm exhausted trying to make that happen. All right. So if everybody saw, Tyler published the piece last night and actually 2 days ago. All right, we'll try one more time. And open time. Thor. Woo! Okay, not really. All right, I give up. All right, so, and the piece is entitled A $10 Million Bitcoin. So, and it actually, lost my breath there, Ty. The long and winding road to a $10 million Bitcoin. And we talk about what that road actually looks like and just, I am going to, while I catch my breath, throw it at you, Ty. So first of all, we're going to talk about the piece. We're going to talk about the fact that we are leaving for Unconfiscatable tomorrow. And the workshop, we actually have a couple more seats. And also the price action of Bitcoin this morning, which was kind of interesting, which was very interesting. And while I catch my breath, Tyler, how's it going? And we published the piece finally.
Yeah, great. Good morning, everyone. Yeah, sorry it took so long. It took about 2 weeks longer to get the Medium piece published, but we just wanted to be very accurate on all of our numbers, what we were concluding. And thank you all who have read it for all the great comments. And what we intended to do is start a conversation that ties Bitcoin in with the macroeconomic picture. And we felt that this was the best way of doing it. As you know, we've concluded that the problem of debt and credit is out of hand. Originally, we thought there were 4 solutions to it. We now think there might be a 5th solution, which I was able to briefly talk about in the article just by naming it, which had to do with a basket of securities and commodities, including maybe gold and Bitcoin as a basket. But we're still doing a lot of analysis on that. I think everybody has heard us say that we think there are 4 solutions, which is Bitcoin, a gold standard, default on the debt, or growing out of the problem. And to that, we added a 5th, and we're going to do 4 more articles as in-depth as we can on each of the potential solutions. So we were glad to get that out. You just go to medium.com and you can put in Lucid Investment Strategies or the long and winding road to $10 million Bitcoin, and you can read that. Second thing Leah said, we are jumping on planes tomorrow, head to Las Vegas. It's going to be an incredible Bitcoin-only conference. No shilling of ICOs or alt projects, a lot of learning. And on Friday, Leah and I will be conducting a 7-hour plus workshop on Hyperwaves specifically, the first time we've done that publicly. There are a couple of seats available. We filled up the original 30 seats, added 10 more. We filled up those 10, and now we've got some additional seats if anybody can make the last minute trip on Friday. I know there's a number of people flying in just on Friday for the workshop, and then they're flying back when it's over, mainly because the rest of Unconfiscatable is sold out. Basically, all the seats are gone for all of the various happenings, like the poker tournament and the carnivory dinner. And there's, I believe, still a couple of seats open in Tone's presentation and in Jimmy Song's presentation. But in any case, it's going to be a fantastic time. We'd love to meet everybody there. We've got a lot of clients and consulting clients and friends that will be there, people we've never met before. And we will have 3 or 4 days basically to sit around with everybody at various venues and get to know everyone. So that's going to be terrific. I just quickly called this vlog today $10 million Bitcoin. I wanted to make a couple of quick clarifications from a number of comments that we've gotten. What Leah and I have concluded is the best solution to the problem of credit and debt would be Bitcoin. We are not saying it's the most likely. And we're not going to draw any conclusions about what is the most likely until we've finished the next 4 articles in Medium that will explore the other 4 alternatives. Right now, I am leaning towards the gold standard being the most likely. And that sets up a very interesting dynamic for Bitcoin. And here is that dynamic. And we didn't talk about it in the article, but because of all of the comments that we've been getting from the article, I just wanted to make this clear. I believe that we are going to see $100,000 Bitcoin, regardless of it being adopted as the final solution to the credit debt problem. But to get to the $10 million figure, it will have to be the solution. And that sets up a binary outcome of the movement of Bitcoin after this bear market is over. It's either going to start another hyperwave that will take it up to 100,000 and maybe some higher number than that. But we don't want that to happen. Because if that happens, that means it's going to fail and come back down just the way it did from 20,000. That's what a hyperwave does. There's a good side and a bad side to a hyperwave. And again, that's going to become very clear to everybody on Friday when we do our workshop. What I want to see happen is I don't want to see a hyperwave develop in the next round up for Bitcoin. I want it to become an S curve that is very different than a hyperwave. It might look the same as it starts up. The difference will be that when it gets to certain levels, somewhere around $400,000, where it can compete with the price of gold and the amount of gold in the world, which is about $7.5 trillion, and at $400,000 Bitcoin, we will be at that $7.5 trillion range and will be able to compete with the gold standard. But somewhere between 100,000 and 400,000, what we're going to see is either adoption of a gold standard or a Bitcoin standard. And whoever wins that battle, the other party is going down. It will be a hyperwave for Bitcoin, and it will go through a 5, 6, and 7 and return back to the bottom. If Bitcoin wins that battle, then gold is going to drop very, very sharply. And as we get closer and closer to those kinds of decisions, we'll go into much, much more detail as we try to follow it along with everybody else in the world. Now, that still leaves the most probable outcome, unfortunately, which is default on the debt. Because to get either a gold standard or a Bitcoin standard in time, where the world has a choice and central banks have a choice, we need time for either the world to come to the conclusion that a gold standard again will work. And that's going to take many months and possibly years to work out the details of that, in which time we might have the solution forced on us in the form of a default, because that's out of no one's control. Nobody can control if and when the world is forced to default on debt. Okay, so I just wanted to make that clear. We didn't go into that kind of granularity in our piece because we were only talking about Bitcoin and the possible path up to $10 million. But I did want to make that clear that I'm not saying that Bitcoin is going to be the winner of this battle. It is one of 4 or 5 choices. It's the one I prefer. And we didn't go into a lot of detail about why I prefer that. That will come at the end of the series of Medium articles. Okay. Leah, I'll just turn it back over to you very quickly in terms of that comment. I kind of sprang that on you too. Was that clear what the point I was trying to make?
I think you're always clear, Ty. A lot of people are asking questions in the live chat. If you want to give a little bit of a teaser, though, I would say that the piece is incredible, everybody. Please read. And we don't go into the granularity, as Tyler said, that we will in the next pieces. So I would just make the clear distinction that this is one of 5. So that in the future, we're going to be going into it in much more depth. So I'm seeing questions about the gold supply and just also how, we're calculating all of this. So Ty, if you want to just give, I guess, a bit of a teaser of where your thoughts are on
Sure.
how we're going to take this piece even further so that everybody understands that's not the full magnum opus there.
Yeah, absolutely. What we are trying to do with this 5-piece analysis is, first of all, try to provoke comments from a lot of very intelligent people that are reading this series or will read this series after our first one on Bitcoin, to give me other alternatives to a bunch of assumptions that we're making. Number one, we're assuming that there's a problem that must be solved, which is the debt problem and the credit problem. My thesis and what we tried to build in this first piece is to show the imbalance between world wealth and world debt. And world wealth is still greater than world debt. The problem is world debt is growing 3 times faster than world wealth. And we tried to bring a lot of numbers together, breaking that down to show that we have crossed a line in which central banks and the banking system and the world in general has lost control of the ability to control the debt relative to the total GDP of the world and the wealth of the world. That's the thesis. We then provide 5 solutions to that problem. One of them is Bitcoin, one is a gold standard, one is defaulting on the debt, one is growing out of the problem, and then the 5th one is a theoretical basket that has been proposed by China and other ones and has been debated in economic forums for years, which is a basket of currencies and a basket of commodities, and it might include something like gold and Bitcoin. And that will be the last thing we're going to look at. So that's the overall picture. All we did in this first one is we picked one of the 5, which is Bitcoin, to go into depth of what would it take from today's price of $3,500 to get Bitcoin into a position to compete with the other 4 solutions if the world has a choice. And so that's why we called it the long and winding road, because it's going to be very difficult. We both believe, Leah and I, that it's going to happen, meaning when this bear market is over in Bitcoin, we're going to go much, much higher, regardless of everything else. But how it goes higher and what are the necessary steps for developers to take and for the crypto community to take to get it to go higher, and then where are the bumps along the way. And that's what the article does, is it lays out a roadmap of going from $1,000 Bitcoin up to 100,000 fairly easily, we believe, and then struggling to get up to 400,000, and then going to war with gold, which we believe will be won by Bitcoin if we can get Bitcoin over $100,000, because we think that many of the gold hoarders and the gold bugs will see that Bitcoin is actually superior to gold in what those people that were in gold believe to be true about gold. Bitcoin does it and does it better, in our opinion. And then we'll go into other things after that. So that's kind of the background. Now, there's a difference between what we would prefer to happen and what is going to happen. What we would prefer to happen is because of the ranking that we give each of the 5 choices in terms of the collateral damage that will definitely occur. This thing is not going to go away easily. It's not going to go quietly into that good night. It is going to be a battle royale between creditors and debtors. There's a counterparty in both cases, and somebody's going to be badly hurt by whichever of the 5 solutions finally comes about. So we started with Bitcoin because that's one we believe is the best, but we do not believe it is the most probable. And to understand that, you're going to have to wait till you read our future articles on the other 4 possible solutions.
Thanks, Ty. All right. Well, if I could add a couple of things, just because it's morning, I've been sick, everybody. So, well, actually, everybody who attends gets one of these shirts, thanks to crypto. So that's why I'm wearing it today. So our live chat, thank you this morning. You guys are definitely provoking our thoughts. One person asked about if this has any relationship to the hyperinflation of the Weimar Republic. Well, actually, I think all you said was Weimar hyperinflation, which is actually a very interesting, astute observation. Right now, we haven't talked about hyperinflation too much, but this is one of Tyler's expertise and how it changed the banknote. But also, I think that maybe, at least in these vlogs, we'll talk a bit more, and we have in the past, about deflation. But I did find actually that comment, and yes, that was 1923. I think it was like something like 250 marks became the amount for bread. But that was an interesting topic. I would love if you responded just to how we may roll in and talk about hyperinflation, especially given that that's usually, I believe, like the quintessential example that people give who are talking about the central banks and the Fed and quantitative easing. They worry about that Weimar hyperinflation, especially because I guess the propaganda machine of it being hidden. And then second, I saw a really interesting question, which was, could this potentially not be a next hyperwave, but potentially an S curve? So maybe just a teaser of, we're about to do our first real hyperwave workshop, everybody, where active hyperwaves are going to be discussed, as well as the Bitcoin hyperwave. So I guess this is, I'm making it a little into a fireside chat until we get up to price action, Ty, if that's okay. But I thought those 2 things were thought-provoking and fun for the morning.
No, absolutely. The most important thing to consider about where we are in the macroeconomic picture is what is in front of us is deflationary, not inflationary. You try to inflate yourself out of a debt problem. And that's what happened in Zimbabwe and in Argentina, and now is going on in Turkey and in Italy. And what happened in the Weimar Republic is you try to inflate yourself out of a depressed state. That's not where we are. We've already got way, way, way too much debt. And a default on the debt or any other solution will not be inflationary. It will be massively deflationary. Much worse, because of the implications. And we will do a whole webinar on that at some time, but that's not what we are worried about today. We have no inflation, or almost no inflation, and all inflation means is you're printing more money than you have demand for.
Ty, can I add one thing?
Yeah, please.
People forget, but we have an inflationary target every single year of 2%, which is healthy. So while you continue, everybody says that, talking about inflation is bad. Actually, for the good growth of an economy, although all of this, obviously, economic theory can be debated, I just wanted to put out there that inflation is targeted every year in order to be for at least how our current government believes to be a growth strategy, and like a healthy growth strategy, it being if you can keep it at 2%. And so
that's exactly right. And right to my point, because we can't even hit that 2% target. Keeping interest rates at 0 for 10 years couldn't hit a 2% target. What does that tell you? It tells you there is no inflationary pressure. And that's a very long debate. But so my point about deflation versus inflation is inflation is not something for us to worry about. Paul Volcker killed that back in 1979 and 1980. But the second part of the question was this observation that I made earlier in this talk today is I do not want another hyperwave in Bitcoin, but it's probable. It's probably going to start and look like a hyperwave as we run up to 100,000. But I don't want it to end as a hyperwave. It will end as a hyperwave and come all the way back down again, because all hyperwaves do, unless it is going to the next stage, which will be the solution to the world debt problem. Then we will go to $10 million, at which Bitcoin will be worth approximately $200 trillion, which will put it in a position to be used by the world as the reserve currency of the world, with a reserve of 40% against the debt and about 3 times GDP. And we can go into those numbers later. But yes, hyperwaves are very, very important. And you can make a lot of money on them when they're going up, but you must know that they all end. And when they do end, they go all the way back to the beginning. We don't want this next move in Bitcoin. For those that are Bitcoiners and believe in Bitcoin, we don't want it to take the form of a hyperwave. It will look like one up to 100,000, but then it has the ability to change into an S curve where the top will be much, much, much higher and will not come down, at least for many, many generations. So that's just a broad overview. And we're not going to actually look at a chart because I'm still uninterested in the Bitcoin chart. It's going to 1,000 in my opinion. It hit 3,400 this morning. The reason Leah brought it up is because it took a very big move down to 3,401, not hitting the old lows at 3,180 in this bear market, but looking very nasty. But then that 30-minute candle that was red turned green and came all the way back up, and then bounced all the way back up over 35 to 35.90, and now it's settling back down into the 35 range. So in any case, long-term picture, and a lot of people on Twitter have been challenging us, saying that we did not make a call back in December, that the hyperwave in Bitcoin was over when we broke down from 19,666. And I commented just very quickly, all you have to do is go back and look at any and all of the last years of any of our vlogs, and you'll see that that's not true. We pinpointed it at the top. Nobody can get out at 19,666, but we got out within a week or 10 days of the top. And we said at that point, it was going all the way down to 1,000. We got down to 17,000, we got down to 13,000, we got down to 10,000, 8,500, 7,500, big debate, big debate, big debate. That's the bottom, that's the bottom. Gets down to 6,000 over and over and over again, big debate, big debate. But I was uninterested in that debate because Hyperwave tells us where it's going down to 1,000. Well, finally 6,000 broke sharply, and we dropped from 6,000 to 3,000, making everybody who was publicly stating that 6,000 was the ultimate bottom not look foolish, but simply shows how powerful this hyperwave technique is. And now we're messing around in the 3,000 area. Well, that's fine, and it could bounce back to 4,000. It could go to 5,000. I don't think it can get above 4,200, but maybe it can. But I don't care. It doesn't matter. Hyperwaves are hyperwaves. Bitcoin isn't a hyperwave. It's going down to $1,000. But who cares? Because then it's going to 100,000, and it could go to 10 million. And that's what we're trying to do in this article. So people that have been painting us as anti-Bitcoin, anti-crypto, just don't understand the fact what the long picture has always been. The reason Leah and I started doing this a year ago is our complete understanding and belief of what Bitcoin is and where it's going to go. But don't tell me what to buy. Tell me when to buy it. And this is not yet the time to buy it.
Thanks, Ty. And if you'll indulge me for a second regarding your, I know I shouldn't, but deflation. Yeah, okay, the economist in me. So just for everybody here, absolutely true. What's interesting to me that Tyler and I have been talking about is a lot of econ news has been coming out. And if you guys remember, hyperwaves occur with major economic shifts in the world. So it's actually really, really important, in our opinion, to start following also not just the United States GDP, econ statistics that have been coming out, but also around the world, not just the markets, but also just all the factors from REITs to what's happening in the housing market specifically, which I think we'll get into, what's happening in the credit markets, everything. So regarding inflation and deflation, one of the biggest indicators you should be looking at is consumer price index. Tyler, stop me at any point if you disagree or if I'm incorrect, which happens quite often. What's interesting that I was texting Tyler about is actually the US consumer price index dropped for the first time in 9 months and to a very dangerous level. So again, yes, it's contended that 2 to 3% inflation is usually healthy, and that's why it's targeted. But deflation is terrible, is way worse. And a great example is Japan. We could talk about that one day and all the failures of the BOJ and 30 years and the fact that, it goes on and on. But that's a great example of how terrible deflation is. And just wanted to, because Tyler and I like defining words and being very specific. Well, Tyler's very good, talks very slowly in order to have perfect words. I get too excited. Maybe, hopefully one day I will learn from you, Maestro. But just really, really simple, right? We talk about how simple the markets are with supply and demand. Deflation occurs when changes in prices turn negative. It's really simple. So when prices begin to fall after an economic downturn, and we're looking at a recession potentially right now, deflation can set in, causing an even deeper and more severe crisis. And as prices fall, production slows, inventories are liquidated, demand drops, there we go, and unemployment increases. And just changes in CPI are, right, the economic statistics compiled in most nations, not all, comparing changes of a basket of diverse goods and products in index. Sometimes they do non-farm goods, etc. And in the United States, it's most commonly referenced index for evaluating the inflation rates, right? So when the changes in prices in one period is lower than in the previous period, the CPI index has declined, indicating that we are experiencing deflation. So I just wanted to lay that one out so that all our words are being clear today, because we definitely will talk about that. But there's a lot of economic and a lot of interesting factors at work. And I'd say that all of our articles are in response to that. Things are looking very scary, specifically about debt, and that's what we focus on and what the options are for nation states right now. And as per what Tyler said, what we hope the option that will be picked, but it may not be. It probably won't be, but it will depend on a lot of other factors coming into play. Tyler, call me
Great.
on. Yes.
No, that's exactly right. And again, any last minute caravans, bus trips to Vegas, we would love to see you there. It's going to be incredible. It's going to be fun and probably one of the best learning experiences any one of us has, including myself. I am there to learn because the speakers are the best in the world in terms of what Bitcoin really means at all levels. The development level, the financial level, the potential level from a macroeconomic point of view. I just can't wait. I'm going to sit there like everyone else and listen very, very carefully to the experts. We have some strengths that we bring to the table. They're fairly narrow, but very important in this climate. Hyperwave is something that people need to understand in order to understand all of these cross currents that are taking place in the macroeconomic picture. So with that, thank you very much. And back to you, Leah, and then we'll say goodbye.
All right. I was screen sharing. We did our
Yeah,
show.
I saw it. Terrific.
Awesome. All right. Hopefully see you guys in Vegas. I am in trouble, but there is one incredible gentleman who was a former professional poker player trying to teach me. I feel bad for him because I am not the best student right now, but I am trying my best. It's going to be so much fun. So hope to see you guys all there. And yes, the piece, you can find it, on Medium, but specifically if you go to our Twitters, we've tweeted it. And again, as Tyler said, looking forward to all your comments, slice and dice, hopefully the good, the bad, the ugly, the everything. And Tyler?
Great. Thank you all very much. And we'll talk to you later. Bye-bye.
Ciao. Bye, everybody.